Back with the market right here on ET Now. Another smooth session for Interglobe Aviation as several tailwinds continue to drive the stock to new highs. What's been working for the stock? What could rising competitions spoil the party? Somit is here to break it down for us.
Well, for the first time since 2019, the first half of the calendar year has been the best year for Indigo, nearly 26% returns so far in the first half of 2023. Now, last time we saw something like this was before COVID, 34% return in 2019. So, what is leading this rally for Indigo in 2023? Firstly, it's the dominance that Indigo's dominance that has been continuously increasing. Now, this has also been aided because of Go First shutdown and because of some fleet issues that we have been seeing within SpiceJet. And if you see on the dominance factor, Indigo's market share has now increased to more than 60%. Also, given the fact that Q1 is a seasonally strong quarter, yields have increased sequentially, and let's expecting at least a 10% growth on the yield front, also because of the Go First shutdown. Along with this, cost are also very much stable for the company on a sequential basis. Fuel prices have come off while INR, that is Indian currency, has remained pretty much stable, which means that the cost could also be on the lower side for Indigo in the first quarter of FY23. Now, also the air traffic has been increasing on a sequential basis and also on a month-on-month basis. Now, the daily air traffic so far in the first quarter of FY24 has increased nearly 3% on a Q-on-Q basis, while it has increased nearly 20% on a YOY basis. Also, the company is focusing more on increasing the share of international airspace in their total capacity mix. Currently, it's at around 23%, and they aim to take this to around 30% over the next 2 years. Now, increasing focus on international space also means that their margins could be higher going forward. Also, among the airline space in India, if you see, Indigo's balance sheet is the strongest. They have free cash of close to 12,200 crore rupees, and they also aim to double their fleet count by 2030. From 304, they aim to take it to over 600 over the next 7 years. Also, recently the company placed an order for around 500 aircraft, which would aid their fleet size beyond 2030 as well. Now, if you see, recently a couple of brokerages also came out with bullish note. Firstly, Investec, and second was UBS, and they both are expecting a blockbuster first quarter of FY24 earnings from Indigo. In fact, UBS has gone ahead and said that the first quarter FY24 EPS could be 37% higher than the highest ever annual EPS that the company had reported in financial year 2018. So, a full financial year EPS versus only first quarter EPS, and that too is expected to be 37% higher as per UBS. However, there are a couple of risk factors when it comes to Indigo. The first one is the increasing competition. Now, Tata Group is looking to merge its airline operations, and that could be a big competition for Indigo going ahead. And the second is an overhang, not much of a risk that we see, but Gangwal Group is looking to sell their stake, and they own around 29.7%, and the lock-in period ends in July, and they could sell stake up to $1 billion. That is what the street is expecting. So that could be one overhang on Indigo share price.
All right, thanks very much for giving us those updates. Let's connect with Chakri Lokpriya as well, who's joining in on the show to get in his outlook on the markets. And Chakri, good to have you on board. Let's begin then by talking about the HDFC Bank merger date, July 1st. That certainly did a lot for market sentiment as well and spurred us all the way to the 18,800 mark.
Yes, good morning indeed. And, now the overhang is largely removed now that we have a date, and it's going to be the 10th largest bank in the world after the merger, and it'll have close to about 400 billion in assets. And as costs are going to come down because of the combined entity costs, and therefore the margins are likely to move up. As a result of all this, I think as we reach the date of the listing of the new entity, HDFC Bank, because the arbitrage between HDFC and HDFC Bank also is narrowing. I think for HDFC Bank, from here on, it'll trade on its fundamentals, which is higher margins and higher loan growth.
Okay, that's the take coming in on HDFC Bank merger. Finally seems like the sleepy giant is going to wake up and you are going to see some active participation coming in there. You know, we've been talking about the entire insurance space, and HDFC Life clearly comes to one's mind. And Kunal, just on the charts, considering we've been talking about this for the last 10 odd days, good bounce as well coming in for all insurance names. And yesterday, HDFC Life, along with HDFC Bank, was firing full cylinders.
Well, yes, Aisha. In fact, the last 2 months there has been a complete sea change for the entire insurance stocks. HDFC Life, of course, has been one of the strongest stock in terms of the recovery. It's done reasonably well to come back towards 600, 650 plus mark. But I think at a point where the stock was into a sharp selling run, the stock was at 550 odd level. So to recover more than 20-25% in a matter of this last 2-3 months of recovery indicates that the strength is quite strong. The volumes have been more consistent on this uptrend. The stock has confirmed breakout of its respective 200 moving average. So all of that positivity has happened for HDFC Life. Now it's a matter of this this bout of rally to convert into a huge uptrend for itself, which we've not seen for the insurance stocks in the recent past. So I think that's the only change which would be required. But yeah, I think the likes of HDFC Life, SBI Life, ICICI Pru at 570 plus levels, all of them look attractive.
All right, that's the verdict on HDFC Life. But let's talk about stocks on the editor's radar. And it's SBI Life that we're discussing, as well as LTI Mindtree and JSW Steel. Let's tell you why. Begin with SBI Life then. And just comparing it to some of the other life insurance stocks, multiple triggers and brokerages giving this a thumbs up.
Look at the price change in insurance stocks. The insurance stocks have been a late bloomer, but SBI Life has not participated at all. It's pretty much like SBI. SBI has not participated in this year, and SBI Life has also not participated. Is there something fundamentally wrong with SBI Life? Is there a reason why others have caught up and SBI Life has not caught up? And no, sir, there is no fundamental factor why SBI Life should be underperforming. They are firing full cylinders, both in terms of the guidance, the margins, the market share, and the valuations. So I will not be surprised that in and around the numbers, now that this insurance flavor is making a comeback, SBI Life in a sense could be the stock of this quarter. I'll stick my neck out and say that. SBI Life really could be the stock of this quarter, purely looking at the positioning of the stock, technicals, purely looking at the valuation, and where the entire insurance space now per se seems to be moving. Selling, branch network, their ratios are strong, their margin guidance is strong of 29 to 31%. That makes it like a superior life insurance firm. In the near term, because HDFC Life, because of this HDFC merger, has really got a lot of attention. ICICI Prudential, because of change of guard and what's going to happen after Mr. Bagchi is going to take over, I guess has got the marketmen excited. But don't lose sight of this. This is still India's biggest and the largest life insurance company. Look at it. Yeah. SBI Life versus HDFC Life, there's a technical factor here. And there is a bit of a SBI overhang here, which I think should change.
Okay, sticking your neck out, looking at a strong upside potential for an SBI Life. Lots of triggers working in its favor. Let's move right on then. And on the back of the HDFC Bank merger news, there is indication now that a probable inclusion into the Nifty, we discussed this earlier this morning, will be LTI Mindtree, and to the Sensex will be JSW Steel.
Yeah, so we've scanned 3 brokerage reports. All of them have pretty much a universal view that it is going to be LTI Mindtree. When a stock makes it into the Nifty, I don't think it's going to be having a very large weightage per se, but it is going to be an important stock per se. You just may see, you may see a preemptive rally. We saw a little bit of it yesterday. A little bit of steam is still left. I don't think it's going to be really changing the fortunes in the short term. Why? Because it's not going to have a large weightage. Also, the size of index funds in India is not very large. Unlike what we've seen, let's say, in the Western markets where the index funds and the ETFs are very large, that's not the case, at least in India. Equity diversified schemes are big and index funds are small. Stock has seen a run-up. There will be some excitement which may linger along for next couple of days, let's say in the run-up to the time the index changes are not announced. But I guess post that the stock may just settle down because the weightage changes are not going to be large. JSW Steel, I think, would be an interesting one, largely because for the Sensex per se, now the weightage of metals is only going to increase. And JSW Steel, in a sense, has been in performing stock. Unfortunately, in India, Sensex is not very large because you don't have too many ETFs which invest in Sensex. Nifty is still much larger. So the flows into LT Mindtree, I think, are going to be about 150 to 170 million. JSW Steel, because Sensex is not very large, could actually be less.
Okay, that's interesting then, Aisha. We're talking about the Nifty rejig as well as SBI Life.
Oh yeah, absolutely. In fact, talking about these stocks, here's Dipan Mehta telling us why he likes IDFC First Bank, VA Tech Vibhag as well as Praj Industries.
So in the banks, we like this IDFC First Bank. I've discussed it on your show many times with Nikunj and other co-anchors as well. Basically, I think it's a very aggressive company. They built a solid brand. They are focused on building their retail deposits. and they have amongst the highest net interest margins in the industry, and it's a great sort of growth stock to own at this point of time. In the capital goods, we're very positive on a niche player called Borads Industries. We've discussed that also on your channel before. It's, of course, that company is chasing the ethanol opportunity, but they have got great export prospects, as well as in India. I think the way the government is giving impetus to sugar companies to set up more and more distilleries, I think they should have no dearth of business. You could also add VA Tech Webag to that list. It's a water projects company, and we all know because of these weather patterns how important water is and water conservation projects are.
Chakra, I want to talk about Bajaj, especially in the backdrop of the launch of Triumph and Scrambler in London and soon here in India on July 5th as well. Could this really be that game-changing moment as you had in the past with the Maruti when it came to India first? Could it be that moment for Bajaj? And could it really compete with the Royal Enfield by any chance?
Yes, Asha, I think, Triumph is an iconic brand. It's coming back to India through Bajaj again. And it's a well-known brand, not just in India, but also in the UK and other overseas markets. So now that you have a fresh push, I think it clearly is a challenge to Royal Enfield. And this brand will see a lot of traction because it's a name very well known and add to the export volumes.
Vaishali, we've discussed State Bank of India, but what is your view on other State Bank of India subsidiaries? Because SBI Life has underperformed, SBI Cards has also done nothing. I mean, 2022, if you had a prefix SBI or a suffix SBI, that stock did well. Right now, it's the other way around.
So I would totally agree with you, Nikunj. Actually, the way I'm seeing the chartical presentation on SBI cards also, I think there is a lot of scope for upside from here on. So let's say chartically, if you ask me, it is in the process of making higher bottom formation. And we are seeing that there is, since 2 days, there is some pickup and increase in volume coming in. So I would say the risk-reward ratio from here on is quite favorable. With 835 as support, the near-term target I would look at is 900, 910. And with a broader perspective, if one has to see, I think in all likelihood, this can go above 935 to retest the levels of 1,000. So I would take a pick on SBI cards as well as SBI Life, because as you just mentioned, and I was seeing the chart, there is a room for upside technically too. So these two stocks, in fact, the whole of SBI basket looks favorable from here on.
SBI Life, 1,286 rupees. Chakri, why SBI franchise stocks are underperforming? Last year it was HDFC franchise. Ye coincidence hai. There's a time when all Tata stocks do well. There's a time all Mahindra stocks do well. There's a time when all HDFC stocks don't do well. Right now it's all SBI stocks which are not doing well. All are different businesses, but the market treatment is the same.
You're right, Nikunj. And in the case of SBI, it's partly, I think, to do with the expected credit loss to be included in the provisions. That news has been kind of an overhang on all the PSU banks. It's just a discussion paper, but that matter still seems to be out there. Second, the banks have had a very good run-up. If you look at the last 1 year performance of all these banks, SBI included, very strong performance. But I think hopefully, because I think today there was a credit upgrade for some of the banks, SBI included, and that will act as a catalyst because clearly the valuation in its favor, the balance sheet in its favor, and what they're doing in the digital space with Yono is actually quite remarkable, and they'll gain not just market share, but also margins.
Well. It is Aurobindo Pharma. Sub 400 has become almost 700 plus. 718 for Aurobindo Pharma. Forget what happened yesterday. What is important here is that where it was on 30th of December and where it is now. 63% higher for Aurobindo Pharma. Kunal. The reason I'm quiet is because I'm stunned. I'm stunned.
I think the stock has made a very good comeback. 5 straight months. In fact, I was looking at the charts a couple of days back as well when I did the Chartbusters link for Aurobindo Pharma, and 5 straight months of very strong gains for Aurobindo Pharma from 400 to now 720, 718, where the stock closed yesterday. So it's been a remarkable last 4-5 months for many of the pharma names which have come back after years of correction for themselves. And Aurobindo Pharma, I think on its prime was almost at 1,050 levels. The stock corrected from 1,050 to 400, which means a correction of more than 50 to 60%. So this is not just a short covering rally, but this is probably purely an indication that the major downtrend for these pharma stocks have reversed. Many of these pharma stocks which are traditionally high beta, they would of course rally, bounce more stronger as compared to the large cap traditional ones. But I believe that this is a strong indication that a major downtrend has changed for these pharma names.
Okay, I'll tell you what, let's spend some time discussing pharma and I'll discuss just the price change here. Let's look at the three, four big pharma companies. 3-year change or 5-year change. Let's look at both. Lupin, Sun Pharma, Cipla, Aurobindo Pharma. Let's look at the 3-year and the 5-year change in Lupin. Now this is the 3-year change. Thank you, Patricia. Down 24%. 3-year change. Okay, 3 years the stock has not made given you any return. 5-year change, no return. Imagine where the Nifty was and where Lupin has moved. Now let's look at Sun Pharma. Sun Pharma, the problem started in 2018, so mathematically it will give you better returns. But last 3 years, Sun Pharma has actually doubled. We've not spoken about it, but 3 years, which has this COVID drop, and Sun Pharma never got affected because of the COVID drop because they did not have too much of COVID portfolio, so no re-rating happened. And since no re-rating happened, no de-rating has happened. And in the last 5 years, Sun Pharma has given a 76% return. Let's look at Cipla, the might of Cipla. All COVID portfolio was part of Cipla. The stock went through a massive re-rating during COVID, and then they had to do all kind of write-offs because they overestimated the impact of COVID and they had lots of remdesivir and lots of other drugs. The stock in last 3 years has still given a 58% return. And now let's look at Aurobindo Pharma. This is the 5-year return, reasonable. It's a compounding of 12-13%. Now let's look at Aurobindo Pharma. 3-year return negative. 5-year return is going to be negative also because it was at 1,000, I think. So 5-year return, I will not be surprised if there is nothing there. 20% higher. So that's largely because of the tail which has got created in the last couple of days. So interestingly, Chakri, Sun Pharma is the only one which stands tall in terms of giving market beating returns. What has Sun done in your book, which is making it stand out?
The pharma as a space is clearly which we have not focused on. But in the case of Sun Pharma, they separated out their research division. So they created some amount of value, and they moved down the vertical chain in terms of making their generics more complex, which gives them some amount of margin protection. That also gave them some amount of pricing pressure as far as the US markets is concerned. So I think some of the steps taken by Sun were company specific, which clearly helped in the stock performance.
76% higher for Sun Pharma in last 3 years. So, Vishali, you must have heard this comparison what we did. Sun Pharma, Cipla and Aurobindo Pharma. Now what we've discussed is past. Money is not made by looking at past performance, right? आप first आए थे, first आओगे नहीं, वो important matter करता है. So which is the next one now? You got to go, Vishali? Looks like somebody is calling you.
No, I'm very much here.
Okay.
So I think Sun Pharma is still my pick because in the current scenario, Sun Pharma has not performed. As compared to Aurobindo Pharma, Lupin, well, the bias still continues to be positive, but right now, technically, risk-reward wise, and this stock needs to buck up. So my focus is on Sun Pharma. It is a buy because I would be, for now, looking at a trading target of 1050. And above that, if it sustains, of course, we have our open targets of 1150. So my view for Lupin, Sun Pharma continues to be very positive. And as far as Aurobindo Pharma is concerned, it has shown a lot of run-up. Technically, 720 was the resistance level. So if we see the stock moving past 720 and sustaining above that, then of course we have further high targets of 800, 850. But as of today, I would say buy Sun Pharma.
Okay, so Kunal, आप first आए हो, मगर first रहोगे क्या? Which is the pharma one stock where you would say that a backbencher could become a frontbencher now?
I strongly believe, I think Glenmark Pharma, Zydus Life from the mid-cap pharma names, they're looking exceptionally strong on the charts. The stocks, again, I think in comparison with Sun Pharma, Cipla, even these stocks are significantly down from their 5-year, 7-year highs for themselves. But the prospect for these stocks, the way these stocks have broken out, the volume patterns, the distribution of indicators spread over the last 5 months of the recovery for these pharma names, I think is exceptional. So I would believe that if I have to bet on any pharma names which can make a very strong comeback, say for the next 12 months, 18 months or so, I would bet on Glenmark Pharma as well as Zydus Life.
And why are we discussing so much pharma? We got Ramesh from Lupin coming in today. Ditya from Bernstein, she would join us, put a placard saying, or we'll tease the discussions. Ramesh, the timing in Lupin I think could have been, it's really interesting because they've got the in-principle approval of Soprex. And, there are a lot of mess which they still have to deal with in terms of where their plants and the FD audits are moving. But at 9:35, you certainly want to understand that why and how Lupin is looking at turning around. And things have turned around. Things have turned around for the formulation business. API has not come back, and that's a discussion which we plan to have with Nitya at about 10 o'clock. She is, she's one of the most brilliant pharma analysts in India. She represents Bernstein. But the other stock, other group which we want to discuss, and then we've got a special discussion lined up on that one also, is what's happening to some of the construction stocks. To put it in Hindi, companies or businesses which essentially are in the business of executing projects, making buildings, making bridges, not road companies, but companies which essentially are pure subcontractors. So let's say DLF has to make a building, DLF is a developer, but the building is made by a subcontractor. That happens in Bombay also. So Godrej or Oberoi may be developing a township, they may be developing a building, they may be developing a project, but the construction is done by somebody else. Prestige, they're developing real estate in Mumbai, but the construction is being done by L&T. And let's look at some of these stocks here, which essentially are in pure vanilla construction. Patel Engineering, Capacita, Man Infra, PSP projects. That's the order book which some of them have. But Patricia, let's look at the stock changes here. NBCC is not pure construction actually. They outsource their construction to somebody. But let's say Capacita, Ahluwalia Construction, Man Industries, Man Infra, some of these companies have really hit out of the park. Even something like HCC, it's been a phenomenal comeback. 52-week change, Ahluwalia, 40%. Man Infra, 51%. In a good comeback. We've not spoken about them, right, Kunal? They are like typical chote mid-cap, but yeah, look at them.
Yeah, they've done very, very well. In fact, HCC, I remember, I think just last week on Thursday, had seen a very strong 20% kind of an up move from 18.5 to 21.5 odd levels. So, many of these stocks are now migrating to their higher range of supports. Many of these stocks have confirmed breakouts on higher term time frames, whether it's the likes of Man Infra, etc. So the space looks attractive, but yes, I think as you rightly said that we may not give too much of focus on these stocks on a regular basis, but price-wise, these stocks have shown very good performance.
Yeah, and Chakri, that's the thing, right? You're talking about the infra boom. We can see that all around us here in Mumbai for sure. It's these small stocks which actually have the potential for that big alpha, and some of them already have given you that kind of return.
Indeed, and because with the economy recovering and elections, so many elections in states, there is a lot of construction activity. And also, the confluence of factors, post-pandemic, bunched up contracts all came on board. And these companies, in spite of the run-up, they're still trading at fairly reasonable multiples, 12, 13 times multiples. One of the biggest factors for these companies has been the cost of funds. Cost of funds last year was lack of availability, peak of interest, didn't know the peak of interest rates. Now we are close to all that cycle coming to an end, that is the peak of interest rate cycle, which helps their margin significantly. And so therefore, I think these stocks, while they have had their run up, I think still will continue to do well.
We were talking about the insurance names and HDFC Life. HDFC Limited has bought 1.5 crore shares at a price level of 667 thereabouts. So that's the other stock that you may want to look out for. There's LTI Mindtree. Their arm Foster has announced a new integration with Snowflake. Besides that, there is all the buzz around the index inclusion for LTIMindtree, so that's the other one in focus. And TCNS Clothing as well, wherein the Competition Commission has now approved the acquisition by Aditya Birla Fashion, so that's going to be another stock which is going to be in focus this morning as well. Sapphire Foods, this had a block deal yesterday. Goldman Sachs, Societe Generale, Nomura India have all been buyers in the block deal, so look out for what this stock as well does in trade. And then, of course, we were talking about pharma names, so look out for what Gland Pharma as well does in trade. US FDA has issued one observation for one of their facilities, so look out for that. And then these are a couple of stocks which are in focus. And by the way, Titagarh Rail as well, this has got another LOA for a project worth about 857 crore rupees this time around from Gujarat Metro Rail. The news, of course, came in yesterday. That's going to be the other stock in focus. Are you still convinced about the railway and defense story as a long haul?
Indeed, we spoke about it last time. I think the stock will continue to do well. Even after all the run-up, it still trades at about 18 times, 17, 18 times. Earnings growth is going to be north of 30%. And the order book pace is likely to continue to accelerate, even if it does not. The order book itself is so strong for the next 4 or 5 years. And they're also moving into high-margin businesses. So a combination of all these factors, I think these stocks continue to do well.
Okay. That's Titagarh for you. It has been an exponential jump for Titagarh in last 1 year. 200 has become almost 500. Kunal, you got this one right. I mean, you've been maintaining from 180 that buy.
170.
180, 170. Where is Titagarh headed now?
I think now it's reaching those overbought levels on indicators. So I was looking at the RSI on the monthly charts for Titagarh. I think at 500 plus levels, the RSIs are closer to 85, 90 plus mark for the stock, which means that to buy the stock at current levels may not be a fruitful trade. But then if you're looking to book profits, and I think it's a good time to start looking out about profits at every 5% kind of a rise for Titagarh Wagon. So you can reduce your you can book profits by 10 to 15% margin at every 5% rise for the stock price, because when you see such kind of an exponential rise, when the RSIs on the monthly charts become overbought, it's bound to be that the stock would probably consolidate for at least 3 to 6 months and give you those better opportunities to enter again. So I think it's a good time to try and start booking out profits, at least from those 500 plus levels.
Okay, there you have it. That's the view coming in on individual stocks. But let's get in a sense as to what the outlook is by way of mid-cap recommendations, as the pre-open rates are indicating a pretty healthy start owing to what we saw yesterday. So taking off from those levels and perhaps with a strong handover from the Wall Street as well, expecting it to be a healthy day of trade. Your mid-cap call, Vaishali?
Well, one, as I mentioned, was Bharat Forge, and the other one I would recommend is Ugrocap. So Ugrocap has got into a very strong trend, and yesterday also we saw a new round of momentum setting in with good volume. So I would say 210 should be the stop loss to look for a target of 250 to 260.
Okay, Kunal, your mid-cap recommendation?
That'll be a Ban Birla Soft. I think it's an exceptional chart. The stock has done quite remarkably well in the last 1.5 odd months. From 250, the stock is already at 350 plus levels. So more than a 20-30% jump for the stock in the last 2 months. Even at current levels, the stock is confirming a breakout of a bullish flag pattern. So would suggest a buy with 380 as a target. Stop us at 343.
Okay, and Chakri, good to have you on board. Thanks so much for sharing with us your thoughts on the markets. Moving right on then, let's focus in on other news and updates. And UBS plans to slash more than half of Credit Suisse's workforce starting next month. The move has been announced soon after the emergency takeover of the cash-strapped Swiss lender. More than half of Credit Suisse's 45,000 workforce is going to be sacked as per plans. Bankers, traders, support staff in Credit Suisse's investment bank in London, New York, and even some parts of Asia are expected to bear the brunt of the job cuts. Meantime, JP Morgan continues its bearish stance on China's yuan despite the recent slide. JP Morgan says they expect a possibility of a circuit breaker with stronger fixings of preemptive moves to prevent currency weakness on going non-linear. And mining major Vedanta and chip giant Foxconn have submitted a revised application for semiconductor manufacturing unit to the Electronics Ministry, days after reports suggested that the centre may deny the JV the funding. While Vedanta's display business is looking to hire global talent to build a $4 billion unit, creating 3,500 jobs. Meantime, Tamil Nadu government has stepped in to give some relief to the customers from the rising tomato prices. The government-run farm fresh outlets will be selling tomatoes at 68 rupees per kilo fixed price and gradually will bring it down to 60 rupees.